So from yesterday, the price has moved exactly to where the last review pointed that it would move. So in this video, we are going to recap how we detected the move in time and how you can literally replicate this strategy 100 times over 100 different trades so that you can continuously and stably find trades that you can take. So, if you don't know me, my name is Alan. I'm a professional trader committed to teaching people how to trade. I believe that if I teach you how to trade and not instead of giving you signals, you are going to change your life and you're not going to be dependent on me to be there always for you. Instead, if I teach you how to actually detect the algorithms and understand how structure works, you will be able to change your life. Okay, so pretty much I'm going to switch tabs just for the second here, and you can see that this video was recorded about 7 hours ago, and we were at about, as the image would suggest, 1.16804, and we are at about 100 pips higher here, just around 20-day moving average. So this was just a very straightforward deduction, right? That the price, once it broke above 5-day, and we are sustained in this blue channel, it would be a no-brainer trade all the way here to 20-day moving average, of course. But pretty much as long as we remain in this blue here that I am highlighting, you can expect further buying. This is the algorithm that has basically sustained this whole trend, and we even have a second layer. So we are in very strong buying indeed. No selling at the moment, even though we are at resistance. This is a very risky trade to take. You want to take your shorts off some sort of liquidity level and also on the break of a certain algorithm. So in this case, I would probably wait for some sort of rejection here, and I would want the price to get back under specifically this yellow, which signals the weaker presence of the algorithms. So I want you to understand what exactly the algorithms are doing, right? So you can see here the orange was always building liquidity for the bulls because it's the more horizontal of the selling algos. So you can see the strongest selling is magenta, and that is impulsive. And then we have white, which is a bit stronger, and then orange, right? As the curve starts to form, you can see that curves are literally formed by different tilts of different gradients, and especially as you draw it, you see how we get that curve design, right? So that's exactly what the algorithms do with the markets, pretty much for buying and for selling. And so if you recognize this, you are going to be able to change your life. So we have the orange here, and the orange was continuously building liquidity here. And as long as we remained, it's a pretty strong buying. It was not the strongest position algo. So for the bulls, it's the green, but of course the green or the magenta always gets built for some sort of liquidity here. So in this case, yeah, we just built that liquidity off 5-day, came up, then rebuilt that liquidity off this orange, came up, once again off the orange, came up. You see how we basically just build out trends. So liquidity building, continuation structure, liquidity building, continuation structure, and all within the channel telling us that the buying trend or the buying condition has not changed and pretty much will not change even though we are at resistance. So how does this reverse here? If this were to do that, you want to see the buying weaken, potentially seeing this yellow buying activate that senses that there's less conviction here in the price. You want to see it also at the same time break key structure here, so breaking these blues, which are holding the price higher. And then you want to see the price lack strength of buying, right? So how do you see that? You want to see the yellow algorithm. If I can mark it 10 different times, that's what you have to do here. But that is pretty much how we manage to come up. So it's always just liquidity continuation, and pretty much that's exactly what you can expect here moving forward. So we're at a key moment here in the charts because we are at 20-day moving average. So for the moment, 5-day is trying to catch up to 20-day, and the idea is for 5-day to overtake 20-day so that we can resume a formal uptrend. For the moment, this is not a sustained uptrend until at least the moving averages do the crossover. Otherwise, we cannot expect long-term moves. But they are very close to one another, so it would also be completely unsurprising to see the price chop, but that's for another video. For today, we just wanted to explain how these trades happened. So you can pretty much just see how we build liquidity. Okay, so that's idea number one. Then idea number two is, of course, being able to spot the algorithms. So all of these lines, basically, I know that it's a bit difficult to read, but they signal the different algorithms that are in the charts. And if you can see this, these are the same algorithms that have been used for the past month. And pretty much if you just know them, the price is going to react accordingly. Okay, so I want you to take my chart, just copy it. You'll have access to my algorithms. You can even see how I update it. Uh, and pretty much you can understand how price action works. So that is my goal here. We are currently then at resistance here. So we have to see what happens, but pretty much as long as we are within this blue, there should be a sustained buying condition. So other than that, I have not much more to say, but do let me know if you have any questions. As always, I am here to help you learn about the market. So please, any questions at all, I am here to help you. So thank you so much for your time, and I'll see you on the next video.